sectors which were trading high beta and very high valuation based on order book figures for the next 5 years. And I have alluded to this fact that long dated order book positions can't be valued in the near term at the valuation that with the markets were valuing. So all the investment, this budget has basically told you that the pendulum swings away from investment related themes to consumption related themes. So I think, the maximum brunt of selling is happening where PEG multiples are more than 3. And it could be in any sector. But broadly, what we have seen over the last 3-4 years is that the capital goods, infrastructure, railways, defense, power, renewables, I mean, it has been glorified a lot. And, you are pricing in, let's say, the next 5 years of earning. I mean, that would not stand. And that is what is basically, likely to face the maximum brunt of the selling. On the other hand, given this 1 lakh crores of savings, creating a multiplier of anywhere between 3 and 5 lakh crores on the consumption side, the consumption, which has not done well in the last 2-3 years, is going to be the new bright spot in the markets, particularly the discretionary side of things, which has been quite overlooked for some time. Because not only would you likely see earnings growth, but you could also see some multiple expansion, because you're talking about the multiplier of anywhere between 3 and 5 lakh crores, and the 8th pay commission recommendations are yet to come. And if the fitment factor is anywhere between 2-2.5, then of course that's again going to be an icing on the cake as far as the consumption is concerned. So the glorified sectors of the yesteryears, last 2-3 years, which had gone out of sync, whereas the earnings and the valuation are likely to correct more. Where there is value, deep value, contra, the banking, the insurance, these are some of the places which are likely to happen.
Okay, Manish, if indeed, just one question from mine, and that's this last question from mine at least. The government, in order to reach the targets as they set out for FY25, would mean significant capex uptick in Feb and March. Sequentially, it look very strong, but even an absolute number would be large. Would be a large number, and therefore the news flow would be strong, right? Would it therefore entice, and some state level capex numbers as well are looking solid, right? I mean, Andhra Pradesh is doing this whole new city, etc., so on and so forth. Bihar might do that. Would some of the infra, capital goods, cement led names look possible candidates? Because there too the correction has been fairly swift.
So cement is clearly a proxy on housing, and given the impetus that is given on, 2 houses for self-occupied being away from the tax bracket, I mean, that's going to be beneficial, and obviously a lot of impetus on, household savings. That's going to be beneficial. So anything to do with home improvement, yes. Anything to do with, let's say, near-term capex, and obviously the numbers are going to be 1 lakh crore for, let's say, February and March. That is the capex number if you have to achieve the 10 lakh crore figure for fiscal year 25, that budget. But mind you, the valuations which are getting captured for, let's say, FY26, and the numbers before the budget was anything like a 20% growth on top of 11 lakh crores last year, revised estimates of FY25. I mean, those things are not happening. So from that point of view, I mean, the infrastructure, capex related over ownership, overvaluation has still room to correct. But home improvement and cement and tiles and, the plyboards, furniture and all of these things would come within the consumer discretionary space. Building materials, those would be standing to gain according to, because the valuations are extremely comfortable, and you are looking at a growth cycle as far as the building materials per se is concerned. So that would include even the paints. They have also not done well. Everything related to home improvement, because there is more money in the hands of the consumer, likely to do well.
Okay, Mr. Sonthalia, great having you on a day like this, and getting that perspective. Always a pleasure. Thanks so much for coming in and speaking with us and being very patient because of the last minute cut-in that we had to do. But let's take a quick break on that note. On the other side, we'll get you top BTST ideas, and of course, we'll chat with guests because they've been waiting by as well. So stay tuned.